Welcome to this guide on Bitcoin dominance, one of the most important metrics for understanding cryptocurrency markets. Bitcoin dominance is a market share indicator that helps investors track where money is flowing in the crypto space. Whether you're just getting started with crypto investing or looking to understand market cycles better, Bitcoin dominance gives you valuable insights into the relationship between Bitcoin and alternative cryptocurrencies, commonly known as altcoins. Bitcoin dominance measures Bitcoin's market capitalization as a percentage of the total cryptocurrency market cap. In simple terms, it tells you what portion of the entire crypto market is made up by Bitcoin. Market capitalization, or market cap, is calculated by multiplying the current price of a cryptocurrency by its total circulating supply. Bitcoin dominance essentially answers the question: out of all the money invested in cryptocurrencies, how much of it is in Bitcoin versus all other coins combined? The formula for calculating Bitcoin dominance is straightforward. You take Bitcoin's market cap and divide it by the total cryptocurrency market cap, then multiply by 100 to get a percentage. For example, if Bitcoin has a market cap of $600 billion and the total crypto market cap is $1.2 trillion, you would divide 600 billion by 1.2 trillion and multiply by 100. This gives you the Bitcoin dominance percentage. Let's walk through a real example. Suppose Bitcoin's market cap is $600 billion and the total cryptocurrency market cap is $1.2 trillion. Using our formula, we divide 600 billion by 1.2 trillion, which equals 0.5. Multiplying by 100 gives us 50%. This means Bitcoin dominance is 50%, indicating that Bitcoin makes up exactly half of the entire cryptocurrency market value at that moment. Bitcoin dominance tells two very different stories depending on whether it's high or low. High dominance means Bitcoin is leading the market while altcoins are underperforming. This typically happens when investors prefer the relative safety of Bitcoin over riskier alternative coins. On the other hand, low dominance indicates that altcoins are gaining market share, which often signals the beginning of what traders call Altseason, a period when alternative cryptocurrencies outperform Bitcoin and see significant price appreciation. Bitcoin dominance reveals four key insights about the market. First, it shows market sentiment, indicating whether investors prefer Bitcoin's relative safety or are willing to take on altcoin risk. Second, it tracks capital flow, showing where money is moving within the crypto ecosystem. Third, it helps identify cycle phases, allowing you to recognize different bull market stages and predict when alt season might begin. Finally, it reflects overall risk appetite, revealing how confident and risk-tolerant the market is at any given time. Understanding Bitcoin dominance has practical trading implications. When dominance is rising, money is flowing from altcoins back into Bitcoin. This suggests that investors are becoming more cautious, making it a good time to consider increasing Bitcoin positions in your portfolio. Conversely, when dominance is falling, altcoins are outperforming Bitcoin. This declining dominance often signals potential alt-season opportunities, where carefully selected alternative cryptocurrencies may offer significant gains as capital rotates out of Bitcoin and into the broader market. Let's recap the essential points. Bitcoin dominance shows Bitcoin's market share as a percentage of the total crypto market. High dominance signals Bitcoin's strength over altcoins, typically during periods of market caution. Low dominance indicates alt-season potential when alternative cryptocurrencies tend to outperform. Most importantly, use Bitcoin dominance as a tool to gauge overall market sentiment and capital flow patterns. By tracking this metric alongside other indicators, you can make more informed decisions about when to hold Bitcoin and when to explore opportunities in altcoins.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.